Hi there. Hedera is up by about 1.5% so far this week when the candle just started for the weekly. And it seems like it is stabilizing above the purple key level of 0.089. It's time to look at it through the Wyckoff lens and see where the whales are bringing it to. If you are new to my sessions, I'll cover the Wyckoff stage, the trend change potential, as well as key price levels. These are education content, not financial advice. So, getting into the chart, we're looking at a weekly view. Previously, I shared that we need to see the confirmation of the sign of strength, meaning the price advance with volume. From the chart's perspective, we will see a bunch of white candlesticks. There are two scenarios that can happen. One, a bunch of not so tall candlesticks, but stacked over 6, 8, or 10 weeks, together with higher than average volume. Okay? That's the first case. The second case is massive candlestick. Just a few of them is enough, and massive volume. Okay, going up. Examples. Look at what happened over here. Not that one, that's the distribution. You see, after the price came down, all right, these stacked over 7 to 8 weeks, and the volume back then, you can see clearly it's an uptrend, and they are definitely higher than average of the previous 2 to 3 months. That's the sign of strength that I'm talking about. Okay, if you are new to Wyckoff method, that's what it means. So we need to see that confirmation for what? For the signal that people are willing to get back in. Okay, people are starting to get ready to risk on again. Not saying it's over, okay, because the whales are going to still try to test the paper hands. Okay, during this entire accumulation cycle, all this orange text period. Over here, there was a short one and then a longer one. What the whales do during that time is basically, doing these kind of sideways, checking out the paper hands once, twice, 3 times, until the point they see in the future, maybe 6 months, 12 months, that they have sufficient good news to sell to the market that people are willing to get back to risk on mode, so that they can push the price to the next distribution cycle, like what happened over here. All right. Here, second boost. Not until that point, they're going to keep the price around this range. Why this range? Look at what happened over here. What we call the automatic rally, essentially is that the whales set the trading range top. The TR top is trading range top. That's around the yellow key level of 0.129. Okay? So when the price comes up and show a sign of strength, it has to at least challenge the yellow key level with those candlesticks and volume behavior I described in the beginning. All right? And then the whales may push it back down just to check out a few more times before they let the price go up. Of course, there are scenarios where after the sign of strength, it only mildly retraces because people aren't really selling, even if the whales, throw out some bait. So the price may continue sideways for a short while, and then it starts the distribution. So that's the second scenario that can happen. All right. After the big picture, let's look at the daily chart. Hedera is still trading around the center line. Okay, at one point, 5 days ago, on Thursday, it dipped to the blue key level of 0.077. However, the bulls, you see how high that volume bar was 4 days ago. They push it right through back to the purple key level. If they can sustain this at this level, above the purple key level, when we get closer and closer to next month, there is a chance we see the price shoot above the red key level or even the orange to challenge this triangle over here, aiming for mid of next month, ending this prolonged downtrend that started in July last year. Okay, it started from this point in July last year. It's, well, you can say it's over half a year already. Yeah, while people were still thinking altcoin season, altcoin season, altcoin season. Oh, no season, no season. Okay, that's what happens. So a good sign that we need to see is for this not only to continue staying above the center line, trading on the stronger side of the channel, but you move more towards the right-hand side. So it's a lot clearer that it's not like going to fall back to the weaker side of the channel anytime. Okay, it tested it. It stayed at the weaker half for the entire November and almost the entire, well, actually the entire December, just to get back up to the stronger side in January. But then this month, it starts to fluctuate again towards the lower side, unfortunately. If it does stay at the lower or the weaker side of the channel, April would be stretched even. Okay, look at where it's going. If it really comes down to the blue key level of 0.007, we won't get the confirmation of the trend change until the end of April. I know it sounds a bit pessimistic, but that's what the charts are telling us. Okay, after over half a year of downtrend, I believe a lot of people, including yourself, would have get to a point to accept that, okay, we are really in, I don't know, a bear market or whatever people like to say, but I just look at these trends. So those descriptions doesn't really affect what I'm going to study or how I study this. If you're interested to access these sessions 2 days earlier than the others, join the channel membership now. Here's another video for you. Thank you.